Are you an inspired individual that's seeking to go to college? I'm talking to the students out there that are currently in school or currently gearing up to go to school next year. All right. Maybe you come from a family that's just not as fortunate, and does not have the means to be able to support or pay for you to go to school. All right. For me, when I was going to school, if someone would have shown me this, this opportunity that I could actually pay my way through school simply from the means of my dormitory, just learning something just a little bit, okay, that would get me through to make some money on the daily so I could support my means of providing for myself while in school, wherever it may be. Maybe it was buying some books that I needed for class. Maybe it was buying, some healthcare products that I needed, the essential things that we need while we are in college or in school as we are trying to, push our way through school to get that degree. I say it like that, okay? So maybe you're just less fortunate. Your parents don't have the money to afford to put you through school. So there are lots of thousands, probably millions of people out here that are struggling each and every day. They're applying for scholarships. They're trying to push their way or find some money under a rock to get them into school and help pay that tuition. Okay, the cost of tuition in most universities, we all know, is going up. Okay, from the days when I was in college to where we're at now, we're talking about 20 some years ago. Things have significantly went up, okay? Inflation and money, things have just skyrocketed. And people could not just afford to really go to school because they put themselves in so much debt, by the time they finish. And if you fail to land a good job or tap into or get into or complete an area of study, get that degree in a good paying field, you're going to struggle trying to pay that student loan off or those student loans off. That's why I talk about, or to the younger generation, apply for those scholarships out there. Find ways to get the money, the best way you can. There's millions of dollars sitting out there. So please do yourself your favor. Don't depend on mom and dad or grandma or grandfather or aunt, uncle, or someone that's helping take care of you, and trying to aid you and get into or further your education into school. Get out there, do the research, okay, and find those scholarships that will help you, as well as once you're into school, all right, and maybe you're motivated and driven to have your own money. I'm going to share with you today a way that you can actually work, say for instance, for yourself from your own dormitory, okay? And I'm not just speaking to students out there that are college bound. I'm also talking to beginner traders, young traders that are really stepping into the game, okay? Because there are so many young individuals out there, young-minded people that are really, really, really paving the way and just purely driven, okay? Motivated and passionate about the financial markets, okay? I wish someone would have shown me what I'm getting ready to show you guys, okay? I'm talking to you, the individual that's watching this video right now, that's in college or like I said, who is college bound next year, that's looking or trying to find an outlet. They just don't maybe have a vehicle, okay, to transport themselves to and from work. All right, maybe you're a first-year student and you don't have a vehicle, because most universities do not allow you to bring that vehicle on campus the first year. Okay, so if you're struggling and you need a job, or maybe you're trying to apply for those work study programs or find a job on campus and you just haven't landed one yet, I want to show you a way, and I'm not telling you to follow this means, but if you're someone that's maybe you're interested to finance, maybe your major is finance, or maybe you're just really trying to find an outlet, you're really highly educated and you're trying to find a means to make money for yourself and, pay your way through school. I'm going to show you a way to at least make, at a minimum, $5,000 a month, and it's really easy to do, okay? If you just stick with the plan, all right? Trust me, stick with the plan. And just look for maybe no more than 2 trades a day, okay? We're talking about making $250 a day, all right? Which is $1,250 a week, $60,000 a year, okay? Now, that's a lot of money for most college students. For the average person, that's like $5,000 a month. It may not be a lot of money to some people, but $5,000 a month, depending on where you live at, okay, will definitely pay the bills and allow you to put some money away. If you're a college student, it sounds great, right? So let me go ahead and get over to the charts and show you what I'm talking about. Again, I'm talking to you. If you are a college student out there that's really struggling, or just want to find a way to support yourself while you or through school, okay, to get that degree, all right, and also be able to make money at the same instance, all right? And maybe this is going to be able to, when you get out of school, you land a good job. This could be a way for you to also make part-time money, meaning you got a good paying job, with all the benefits and all the great paying salary, and then you trade on the side. This is where the things that we should be showing our younger generations how to get out there, make the money, and be able to secure things for themselves so that within, say, 20 years, they finish college between the ages of 20 and 21. By the time they're 40 years old, definitely 45, they can retire, okay? It's no longer having to wait till we're 65 to get that Social Security benefits and our pension and, all those great things that we look forward to when we're as far as retirement. Younger people are doing it at an early age, so I'm trying to, and I want to show you guys who are in the younger generation how to do this. So let's get over to the charts right now, okay? It is not complicated, so please do not overcomplicate it. But please take the time. I will say this in foremost. I know I'm talking, guys, but I'm trying to really stress this because I want to change someone's life out there. Learn market structure first, okay? And price action as well. If you do yourself that favor, you are going to curve out an edge for you that is going to be very rewarding, all right? So let's get over to the charts because I just want to show you. You only need basically 2 charts, okay, to really do this. So first and foremost, always find and have yourself a higher time frame chart. I'm talking about a 60-minute chart. It could be a 4-hour chart. For me, I use a 60 range chart because I trade based on range charts. All I truly need is my 60 range chart, okay, and my 12 range chart, which is a lower time frame. So a higher time frame chart and a lower time frame chart. You see that where I'm looking at right now is right in front of me, okay, on my monitor here. Just this right here, okay, this panel right here, left upper hand corner, 60 range and 12 range. Now, I'm going to blow up my 60 range chart right now just to show you what you need to look for to start out, to start out with, okay? All right? What we're doing with the higher time frame chart is just trying to depict the overall direction of the market, and then on the lower time frame, we're looking for our entries, and we're going to talk about how to find those setups, okay? So just stay tuned. So this is what I'm talking about when I talk about market structure. Being able to depict the direction of the market. Is the market trending up or is it trending down? Supply and demand is going to be your key, okay? I know people are going to try to show you strategies all across the board, but trust me when I say, if you take the time to backtest and practice supply and demand and look for it on your charts, all right, you will see what I'm talking about. What do I mean by supply and demand? Aggressive areas of buying and selling. Say for instance here, I'm just going to just rough example. Price pushes up hard to the upside. It's very, guys, if you're in college, you're smart enough to be there for one, okay? So what I'm going to show you is very simplistic, and I'm sure that it appears that lots of younger people are able to absorb things quicker. You know why? Because they're not stuck in their ways, the old saying, trying to teach an old dog new tricks. The older that we get, we kind of get stubborn in our ways. So younger people are able to see things because they're still going through the learning process. Their mind is still developing. So teaching them something is easier than trying to show someone older, okay? So what I'm trying to say is, take a look. The market is pushing to the upside. Just showing you a bullish example of what I'm talking about when I say demand, okay? This is aggressive buying, okay? This is aggressive selling, okay? Now, what we're going to do first on the higher time frame chart is just using this chart to figure out, is the market moving down or up? Simple as that. Let's keep it very simple. Get you a pen and pad and write this down, all right? The market, the last couple weeks, okay, has been making lower lows and lower highs. You can see it swinging, right? Major pullback, breaks lower, right? Pushes lower, lower low, lower high, lower low, lower high, lower low, okay? And then we get shifts, or a shift in the market, reversal, say for instance, okay? So prior to, I would have been looking for shorts, okay? not on my higher time frame, but the higher time frame is showing me a couple weeks ago I should have been looking for opportunities on my lower time frame chart to look for shorts. Now we're going to talk about that on the lower time frame when we get to it. But what happened now, if we look at the higher time frame, is that we started to move to the upside. We flipped from making lower lows and lower highs to higher highs and higher lows. Okay, so I'm just going to draw this out for you real quick. All right, higher highs, made a high, higher low. We didn't break this low here. Higher high, higher low. We still haven't broken this low here. We're still making higher highs. Haven't broken this low here. Pull back. We're still making higher highs. So the market is just making higher highs and higher lows. Understand that you've got to picture that, and just to be able to determine, is it moving to the upside or moving to the downside? That's the only thing we're doing when we're looking at a higher time frame chart. So at this point right now, I'm definitely saying that we are still bullish. So if we're bullish, we're looking for long entries. That's the only thing I need to use my higher time frame chart for. Just to tell me if are we moving lower or higher, okay? So now that I am able to depict now that the market is moving up and I should be looking for long positions, let's just move down to the lower time frame chart, okay, and look for demand setups. So if we are bullish on the higher time frame, meaning making higher highs and higher lows where price is not breaking below lows, but it continuously making higher highs and higher lows, then we're looking for demand, aggressive areas of buying on the lower time frame, which we're going to show you now. The setups that we're looking for them off of our lower time frame, our entry chart. All right, so let's move down now to the lower time frame. Now this could be a 5-minute chart for you. Your lower time frame could be a 5-minute chart. Maybe you're using a 60-minute as your higher time frame to give you the bias. All right, and then a 5-minute chart to make your entries off of. I'm using a 60 range and 12 range. I'm not saying the two are compared. I'm not saying a 60 minutes compared to a 60 range or a 12 to a 5. I'm just saying use a higher time frame, use a lower time frame. Okay, so let's move down. All right, so now we're down. I moved down on my lower time frame chart. We saw on the 60 range chart, higher time frame, the market is moving to the upside trending. Okay, so if it is doing that, then we're just looking for pullbacks to areas of demand. Again, demand are areas where aggressive buying took place. Okay, so we see here the market's just making higher highs, pull back, higher lows, higher highs, higher lows, making small moves here to the upside. Nice retracement, pull back. This is moving into a new session here, and then it continues moving to the upside, making higher highs and higher lows. Right. So we are just looking for one thing that I want to say are breaks of structures as prices moving to the upside. So write that down. BOS, break of structure. If we are continuously receiving or getting break of structures to the upside, okay, and we see areas within that, coming out of that break of structure area, okay, moving to the upside, all right, where there's aggressive buying, then just wait for price to retrace to an area where that aggressive buying started at. So, for instance here, let me show you. See these little swings here to the upside? Push up, pull back, break higher, okay? Then it breaks structure here right below, but then it turns back around and breaks structure back to the upside. So, look for a break of structures above as coming out of swings, as prices pulling back, pushing higher. That's going to be the break of structure where prices moving higher, making a new high. So pushes up, pulls back, makes a lower low before, and then it turns back around and breaks structure right here back to the upside, breaking above this high here. Break structure, push to the upside here, making a new high. So when we make a new high after the break of structure, look within the swing in which the structure was broken to see if there's any key area of aggressive buying, meaning typically I look for at least 3 candles to the upside, okay? Green candle, green candle, green candle. Aggressive buying coming out of the swing to the upside where price broke structure or the market broke structure, okay? So it could have been right here. It could have been right here, all right? So we can mark off these 2 little areas right here, okay? So let's just do that right quick. All right, I'm just going to take what I'm going to do is I'm just going to use an ellipse just to kind of circle the areas right here and then right here. These are 2 areas where price, as it pushed higher, it broke structure right here, leaving behind two small areas of aggressive buying. Green candle, green candle, green candle. I'm going to blow this up a little bit so you can see it. Green candle, green candle, green candle, pull back. Green candle, green candle, green candle, break a structure, okay? Broke here. We wait for the retracement. So a break of structure, follow, and then go ahead, once you see the break of structure, See if there are any areas of demand that came out of the swing to the upside where structure was broken at, okay? If there are, go ahead and mark those zones, okay? Mark those zones. Then what we do is we just wait for price to retrace back to them, all right? Now, if you notice, here I'm trading strictly off of one chart only, my 12 range chart. It could be a 5-minute chart, all right? Whatever your entry chart is. I didn't even mark off zones on my higher time frame. I just used the higher time frame to just tell me or show me, what the overall direction of the market was. So we're bullish to the upside. I'm just scaling down, moving down, and using my entry chart to find zones, okay? The demand zones or supply zone. In this case here, because the market is moving to the upside off the higher time frame, I'm just looking for aggressive areas where price is breaking structure to the upside and pulling back to key areas of demand where the aggressive areas, the aggressive buying started at. So, breaking structure here as price moved higher. Pull back, it tested this zone here. It came back and tested this zone here. Now, what I want to show you just as well, because people always ask, well, how do you know this zone won't hold up? How do you know this zone won't hold up? We don't know 100% for sure, okay? That's left up to the banks and institutions. They're the ones driving the market. We're just the ones in the passenger side riding with them, okay? Understand that. So, when the market retraces back to this zone, it dips a little lower and tests the zone below. If you see a gap, I talk about this in many videos. The gap, okay, where the, out of the area of where demand rests at, okay? So, there's a gap. You see these little areas, okay? Price has to come back and fill those small areas or gaps back at a zone. Sometimes, there'll be gaps of in between candles within a zone, okay? Within a zone. Let's get rid of these ellipses. I'm going to show you this a little bit further in detail what I'm talking about. Blow this up a little bit more. So the breaker structure occurred right here at 75 3/4. It pushes up, okay? Let's mark this. We just marked or identified the first area of demand right here, right? Price pushed up. It broke above this last bearish down candle. It broke above, right? Aggressive buying. Green candle, green candle, green candle, green candle, breaker structure. This is a demand zone. So what we want to do is, after the breaker structure, mark the demand zone with this aggressive buying at, which is just looking at all these green candles, okay? When we do that, then we want to say, okay, were there any gaps? Allow the gaps, okay, to be a key as part of your trading to determine if that zone here is going to be a high probability area to focus on, okay? When price pulls back to it, we want to see, let's just use these arrow lines here. First of all, when price broke above right here, okay? Here's the demands. This will be the demand zone, right? When price broke above, okay, and took out this last red candle to the downside on the push up right here, all right? Broke above this last red candle, the top end of the wick here, broke above it, the next candle that formed, okay, what was right here. There is actually a gap, all right, from the top end of this last bearish candle, price broke it. This bullish candle here broke above that last red candle, last bearish candle. Okay, close. Close to the next candle below. There's a gap right there. So now that we've identified where a gap is left over, or I should say where a gap remains at, back to the supply area, excuse me, not supply guys, I'm sorry, demand area right here. Price can pull back to this, right back to this area with the back to the gap of the demand zone there, and then it can take off back to the upside. All right, that's what we're looking for. But also keep in mind, within this demand area here, give me a second. Okay, there we go. Back to this demand area right here, we also have small little areas of gaps or imbalance, if you want to call them, within the demand zone right here. Okay, there's actually another gap. Okay, I tell you what, I'll just use these lines right here. These arrows. There's actually a gap from here to here as well. So we have a gap right back at the demand zone, but a gap also within the area of the demand zone. So price could test right here, or what I like to see it do is actually come in and fill every bit of every gap, even in or inside the demand zone right here. Okay, so it retraces back. It doesn't reject there. It actually pushes a little lower, and it tests this demand area here. Now, some people will say, well, this looks like it might have just pulled back to the demand zone right there and tested it right there, right? Now, I know I'm being facetious, guys, but what I'm trying to say is really pay close attention. Look, there's also a gap within this demand zone right here. Okay, we've got 1, 2, 3. 3 candles, right? Bullish candles. Demand. Now, price pulls back and it taps right into the demand zone there. But look, there's a gap right here from here to the top end to this right here. I'm going to show you, okay? Let's go ahead and grab our arrow. Right here, this candle here broke broke above this last bearish candle, okay? All right? So, when it did that, it pulled back right back to that top end of that wick of that bearish candle. That's going to be our demand zone. But within the demand zone, we have this bullish candle here, this push up right here, before it broke the top end of this bearish candle right here, the wick of it. So we'll mark right here, okay? Price breaks above. When it pulls back to the demand zone, it pulls back this far right here, okay? Now look, I know my arrow is a little crooked. Let me see if I can straighten them for you just a little bit there. Gracious. All right, right there. All right, so it pulls back, right? And when it pulls back, it doesn't immediately fill that gap, even inside the demand zone. So there are gaps that need to be filled. And price, the market's going to aim for that area. Look what it did when it retraced right here. Retraced right back and filled that gap in before what? Taking back off to the upside. So wait for price after the break of structure. Mark your demand zone. Also mark and see other areas where there are gaps at within the zone itself. Okay, well, once price taps into the demand zone, it pulls back to the demand zone once it fills all those gaps. Then wait for the last part, rejection. Rejection is going to tell you when to get into the trade. All right, in this case here, I'm just waiting for a break of candle above the last bearish candle right here. That's the last bearish candle to the downside. Actually, it would be this bullish candle right here, because this candle actually broke below this last bearish candle right here. So you can wait for a close below this one or this one here. If you want to get it for a better entry, almost a couple ticks, would be the break above this area here. Okay, this bullish candle here. So this last bullish candle, because it broke right below, you can see the body of it breaks below, even though it closed to the upside. This last bearish candle to the downside broke above. The next candle that forms and breaks above here, okay, and closes, all right, even though it closed to the downside, it still broke above before the close to the downside, which still lets me know that, all right, it has not fully closed below this last bullish candle right here, all right, on the move to the upside here. So I'm going to go long at the price form this last bullish candle to the upside, the next candle that forms, all right, and then the moment it closes and I have some break, I see some break to where it broke above this last bullish candle here, even though it closed to the downside, I'm long, okay? Or you can wait for a full break of a candle close above this last bearish candle, which if you do that, then you're not going to be able to get in until around 72. If you do what I said, you know, well, I can say do what I said, guys, because I'm just saying, if you follow the way that I trade, the way things I look at, the candle placements, okay. As I said, this last bullish candle here, it actually broke below the last bearish candle to the upside, but then it turned back around and closed up. The next candle, which was a bearish candle close to the downside, the body of it actually closed above. You know, it has some closure above this last bullish candle right here. So I'm going to go long when I see that type of candle activity, okay. So I would get in. Probably the candle closed down here, but because I also saw where it actually, again, the body of it broke slightly above this last bullish candle here, I'm going to get in somewhere around this area here around 68.5. And if you look to the right hand side, if you're using the volume profile, I'm not saying you do, and I'm not using it to get into a trade. I'm not allowing the volume profile to tell me to get into a trade, guys. I just use it as a GPS, a tertiary tool, an additional tool to let me know or to give me an idea. Am I buying in an area premium or discount? In this case here, I want to be buying an area discount. Demand, discount. Look for prices or areas where prices is cheaper. And then premiums are areas where we're taking trades at area supplies where the market is, where the price of the market is higher. In this case here, we're looking to buy when prices are lower because we're buying at areas of demands. I'm below a high volume area. I talk about high volume nodes. We're looking to buy at a demand zone, okay? Look to make entries below a high volume area, okay? At the outer edge to take it back up to the median or above. So I would get in around 68.5, and then I'm aiming for the highs back up here, back up to the tops here. right here. This is the highs. Somewhere probably getting at around 74 and a half or 75 area. So if you got in here at 68 and a half and took out around 74 and a half, then you pick yourself up, roughly around, maybe 6-7 points right there. Pretty easy. But just look and identify. In this case here, I showed you because we're bullish on the higher time frame and trending up on the higher time frame. Then we're just looking for demands. I gave you the step-by-step process. A break of structure. Look, break of structure. Continuation of breaks of structures to the upside is going to indicate to look for demand areas the moment price breaks structure to the upside. Push up, pull back. Broke structure. Broke right here. This is a structure break at 75 and a half right there. We have a demand zone here. Okay. All right. Demand zone here. That formed as price was moving to the upside, breaking structure. So mark those zones. Wait for price to come back to it. Look for the rejection. Take your trade. Okay. It's as simple as that. Please do not overcomplicate things. All right. Please do not. Just use a higher time frame again to look for and determine what is the market doing overall. That's going to tell you which way to trade. That's all you need a higher time frame for, okay? Then take your trades based on continuations as the market is moving higher, breaking structures. Supply and demand works best when the market is trending because you're going to continue getting breaks of structures, and then we can look for those demand zones to take the trade from. That's as simple as that. Again, this, guys, I wish someone would have shown me when I was in school, when I was in college. I wouldn't need, or I wouldn't have to go out there and be having to find a job somewhere, regardless of, on campus or off campus. I could do this just simply taking a half an hour or 1 hour a day, taking one trade setup or possibly two, and been done. In between courses, in between classes, okay? And been done, and then people be trying to figure out what you're doing, of course, and as I always say, pass it forward, show someone else the way. This is the key to your financial freedom and not putting yourself in so much college debt, okay? Understand that you can have your school paid off within a short period of time or simply not even have, to take out any student loans at all, okay? And then some of you may be fortunate enough to where you have maybe the institution you're attending doesn't cost as much, and you receive money in I should say financial aid. Well, yeah, financial aid money that as far as scholarships and grants, whatever the case is, to pay for your tuition right up front. So doing this is just all perks. It's just plus to where you just putting money to the side and you have enough money. By the time you get out of school, if you're doing this, you're going to be pretty well off, okay? And then you got a college degree, you're able to land a good profession, you could trade part-time, and then maybe, once you retire at the age of 40 years old, which is, you could do, maybe you got a pension that you picked up from a great job, spending 20 years into that, and then you retire with that, and now you have the capability to continue trading for full-time now, switching over from part-time to full-time, from a college student to now doing it full-time. And then in the next 20 years, gracious, you'll have enough money put away to, pay for, to allow someone else to retire off with you. It could be your child, your children, whatever the case is. So anyways, I just wanted to be able to pass this forward to share some things with the younger generation so that they can put themselves and place themselves in a position to where they don't have to struggle. And financial debt, debt would not be by any means, a struggle for you, okay? There will be no such thing as debt for you, okay? You'll be financially free at a very, very, very young age. Too many young people are doing this. I'm not saying they're trading, but they're finding other avenues and ways to actually, make money and not have to be tied to a lot of debt, all right? Set yourself up right. Know how to manage your money, because proper money management is also a part of cutting the ties and allowing yourself to be financially free. That's all I have to share with you guys in this video. I hope the younger generation is watching this video, or even if you are older and you're watching this because you truly wanted to get into and learn how to trade correctly, market structure, price action is all you need, guys. If you do yourself that favor and learn it and master it, I trust you're going to be well more than 90% of the way. The rest of it is up to you, training, your psychology, so that it does not stand in the way of you being able to look for great trade probability setups, okay? Take care. If you're interested in joining our Discord community, which is growing by the day, please come over. Find the link down in the description portion of the video. Invite yourself in. Come over to the trading floor channel on the server, okay? And join us daily as we trade the New York session. As well, if you're interested, you know, in becoming an elite member, elite membership is just where I just kind of just dig a little bit deeper. You know, if you want to see the trades that I've taken as I discuss them and break them down, you receive one of the perks, the trade breakdowns. You also receive the video playlist of videos that I put together that I feel are, you know, great value pack videos that have helped tons of people. Okay, at least I feel they have, you know, because people who are part of the Discord or traders that are part of the Discord talk about it and share their thoughts and thanking me for the information, the valuable information I'm putting out there. You may be asking what the fee is. Okay, $6.99. Okay, I'm not selling anything. It's just your way of supporting me on my efforts of pumping out and pushing out all this free valuable information. And behind that, you get the perks and rewards. That's set up through the membership program through YouTube. Okay, I signed up for or joined into that, I guess, a little bit over a year ago. And again, you receive the perks, the trade breakdowns where I go into great detail. Okay, the video playlist, you get the priority reply to comments, you get the emojis and the badges, so you get something behind, you know, the information that I'm providing. Okay, so please support the channel. Okay, so again, if you're interested in doing that and becoming an elite member, find the join button right here on the video, the join button on the homepage, click on it, and then find the elite membership. You'll see it and you can sign up. $6.99, not $699, $6.99 a month. That's all it is. Okay, guys, appreciate your support. If you are not a sub, what are you waiting for? Please take the time to go ahead and click on the subscribe button down below. Make sure to turn your post notifications on, okay? Because if you do not do so, you're not doing yourself, you know, you're not helping yourself out, okay? Because you're not going to be privy to and know the moment that I post a valuable video that may be packed with content that you're waiting for. So make sure to turn on all your post notifications. And last but not least, do the biggest favor of all. Drop a like on the video. I appreciate it, guys. I'll see you in the next one.